Is the market about to crash? Stay tuned to find out. This video is for educational purposes only and is not financial advice. The speaker's opinions should not be considered as advice from a licensed professional. Viewers should not use this content as a specific inducement to make investments or follow strategies, but rather as an expression of opinion. Follow the rest of the disclaimer, but please do your own research. What up, Tycoons? Welcome to Tycoon Network, where we specialize in trading stock options and providing education on stock market investing to help others achieve financial success. Now, let's look at if we're going to see a market crash or not. I'm going to go over three different things, three different tickers just to show you. So Apple used to be the compass or the guiding light of the market. It isn't that anymore, but I still believe that, Apple has a way to show us if the market is healthy or not. So what we want to do is I want to go to this chart and let's show you. Now we know gaps fill in the market most of the time. Okay. Now I want to show you. Let's go to the max. I want to show you how many gaps we have on Apple. We have 1, 2, 3, 4, 5, 6, 7, 8 gaps on Apple all the way down to $57. Trust me, it's going to get back down to $57. Not if, but when. Okay. So even if we go higher on Apple, when we do have that market correction or recession, you'll see Apple back down at $57. Mark my words. It's not if, but when. And if you go back in history, you'll see it does happen. So these aren't just going to get there's no way all of these are breakaway gaps or runaway gaps, which don't get filled immediately. No way. It's going to have a correction where we come back down to $57. So be sure to be subscribed so you can figure that out with us and make money along with us. But this shows us there's clearly something wrong. There's clearly something that is on the horizon. Let's go to Microsoft. Microsoft shows us the exact same thing. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9 gaps. That does not look healthy. That does not look healthy. And if you look at the market like a race, and it's a car race, and you skirt off at the beginning of the race, and then you have tire tracks, and there's skid marks in the tire tracks. That's what these gaps are. These gaps are spaces in the tire tracks that haven't been filled in. So we got to come back down and fill all of these in. The lowest one we see is at $135.86. That's where Microsoft is going to come back down to. So do not be one of those people that says, nah, we're not going to have a correction. We're going to go up, because I'm telling you right now, in my opinion, we're going to have a 55 to 60% correction. In my opinion, it might be around 61, 62% correction. I don't think it happens this year, but it could start in the latter portion of this year, around September, October, something like that. And then actually really start beginning of January 2024. All right. So this is something that you want to look out for, because yes, market could rally the rest of the year. SPY could go to, 590 or 600, SPX could go to 6,000, in my opinion, it can go to 5,400 next, and then 6,000 this year. But understand, we still could get a 60% crash when we do drop. Okay. So don't be surprised, be prepared for that, because we see all of these gaps in the market, they are going to fill. Let's go to Amazon on the last one, and we'll see on Amazon, it actually shows us a bit different. I saved this for last for a reason, but we have 1, 2, 3, 4 gaps on Amazon. Remember I said gaps in the market fill 90% of the time. It's not if, but when. So breakaway gaps, runaway gaps, they don't really get filled right away all of the time, but we got 4 gaps on Amazon. I'm gonna show you why we need to be looking towards the downside soon. Yes, I do think we could still run up or consolidate or just grind our way up throughout the market, but around the latter portion, around September, October, I will be saying once again, and trying to pinpoint, hey, we might be looking at a top here soon. Yes, we'll get a correction here soon, but it won't be a crash in my opinion. I don't think they can let that happen before the election. So what I want to say is Amazon, if you look back here, you see where we were, what is this? You see where we were 2020, right? This is the 2020 crash right here. All right, you see that? 2019, 2020. All right, that's the 2020 crash. It might not look like anything, but if you look, it is actually 30%. So 27 to 30% crash, okay, over a couple of weeks span. Now, there were some gaps down here, okay? There were some gaps down here, some gaps up here, some gaps over here. Look at what the market did. Yes, it went straight up, and then it consolidated, and then it just went all the way back down to fill all of those gaps, okay? And then the same thing is happening right now. So we went up, up, up. We're going up, and we are about to reach this little consolidation phase right here. Don't know how long it's going to last, but eventually we're going to come back down to fill all of these gaps. And just to show you what I'm talking about, I'll put this on the daily and I'll extend that to the max so that we can see exactly where a gap is. I'm going to show you. All right, so do we have one right here? Let's find a good one. That one filled immediately. Okay, gap right here. All right. So you see the closing price, the flat top, that's where we closed at 108.44. And then we opened at 110, but did we drop and fill that gap? So 108.44, and then we have the low right here at 109.31. Okay, so that is actually a gap in the market. So 108.44. All right. Now, we also got another gap over here, as you can see. So we got this close down here at 95.33, but the low on this candle is 96.50. All right, so there's a gap right there too, 95.33. Okay. This is just to prove how in the future we are going to have a correction. It's not if, but when. All right, so those are low ones. Now you see how, let's actually count how long it took, okay? So around 458 trading days. No, actually, it's further. Around 526 trading days, okay? So roughly a year. A year and a half, actually. Let me see. Oh, my math is off. It's around 2 years. So 2 years later, it actually filled the gap, okay? 2 years later, and some change, it filled the gap, all right? Those two gaps. It just eventually came back down, okay? So we can actually, let's delete those. So needless to say, let's go back down to the weekly chart so we can have that. Boom. So needless to say, this has been the lowest gap right here. It's already been a year and a quarter. All right. So if this took 2 years to correct to the lowest point, it's not too far-fetched for me to think that, okay, we might finish this year out, make a new all-time high because we're like $3 away. Why not make a new all-time high, keep going? And at the end of this year or near the end of this year, the fourth quarter, around like September or October, then we start consolidating and start for our descent to drop back down to this area. And in my opinion, around like the fourth quarter of this year, I would start looking for puts. I would start looking for puts like 2 years out, close to the money as I can get, and riding everything all the way down because people are going to want it to keep going to the moon. I see once again a 60% correction coming possibly in 2025. I don't think it happens this year, but it will happen, in my opinion, in 2025. So um, that is what I'm looking at, and happy trading. Make sure you join our free newsletter, The Tycoon Blueprint. Invest smarter, grow faster. All you have to do is click the link below and provide your email to subscribe. Don't forget to join our exclusive trading and investing community where we provide a blend of technical analysis and cutting edge AI technology like AI powered stock predictive flow channels. We have the crypto alerts for breakouts. We have the stock option call outs by AI. They even give you the strike price and the expiration, along with several other features. We also have the trade suggestions from ourselves, the stock suggestions, leap suggestions, call outs from ourselves, economic data updates, and much more. Make sure you click the link below to join. Here's some of the profits from our trading group. We have from 20% all the way up to 4,000%. Now that's an anomaly, but we also have a couple 100% right here, 500, 160 right here. We also have 50%. So we look forward to seeing you in our trading group so you can get some profit as well. Also, whether you're an expert trader in need of a little help, or if you're a novice and you've never traded before, you want to get our accelerated trading course just for $19.97. We have 3 sections in there: foundation, framework, and finishes. Also having a bonus section with a lot of material that can help you with the investment journey, and it comes with a few ebooks. So this keeps it really simple, hones in on how you can make money now and in the future in the market. So this is really essential if you want to learn and grow. So accelerated trading course, only $19.97. You want to grab that. Lastly, if you or someone you know is interested in futures trading, click that link below for Apex Trader Funding and the promo code. Input that promo code for 80% off. Now, if you don't have a ton of money, you can get access to between $25,000 and $300,000 per account. All you have to do is pay a small monthly fee, but with the promo code, you'll get 80% off. If you get 20 accounts for $300,000, that's $6 million in trader funding. And all you have to do is pay $2,000 a month. So you get access to $25,000 for your first withdrawal. And after that, you'll get 90% of the profits that you make. So once again, click that link below, put the promo code in, start trading now.